Go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today needs no introduction. She is the founder of LaducTrading.com, Samantha Laduc. Welcome to the pod.
Thank you so much.
This is also the season finale of the SGM podcast, season 6. So, I mean, I'm honored to have a guest of your stature come on. And I think where the market is currently, we need your sage advice. My first question would be, are we in a bear market, in a secular bull market, or is this what we're seeing now, specifically talking about tech stocks? Or are we looking at the start of a new bear market?
I have my opinions that we have firmly danced up the mountain and then plateaued for all of 2021, and we are now dancing down the mountain. So I absolutely see this as a top synonymous with 2000 or 2008. So I think the market has stopped going up. We can have some very strong bear market rallies like the one we had last week for 2.5 days on gamma squeeze. And I called it on Monday saying this looks like a short-lived short covering rally. Still waiting for it to digest a little bit, but I have my reshort levels that I gave clients this morning in my live trading room. So I'm going to let it just get there. And then it's a higher conviction re-entry or low risk entry short.
I'm 100% with you, but it amazes me that people don't seem to realize how strong these bear market rallies can be.
It's true because they are maybe unfamiliar with the concept of market structure fed by gamma, which is very largely driven by CTAs or quants that are using very systematic buying and selling. And you could see that buying under the surface starting Wednesday morning into the FOMC minutes. It was solid. And soon after, Thursday, follow through, Friday, follow through. There was no lack of buying. What you have in the past year literally has been selling under the surface since June of last year. So markets basically turned into what I kind of dubbed sold to you markets. So people didn't realize it. Stuff, topped in February. There's lots of talk about that now, but it was the selling underneath the surface since June, and then strongly in November, December, January. What we had the past 2.5 days, in my opinion, was a short-lived, short covering rally with systematic buying to cover and monetize those puts. In an options expiration, post options expiration week. And it was a beautiful thing. Combined with the technical levels of very oversold. So it's gorgeous, right? It was a perfect storm. And then you had the macro narrative of the Bostic pause or the Fed pause, which this morning, immediately Boswell came and said, no, they threw cold water on it immediately and said, no, we're not going to pause in September. So the point is we still have a backdrop of inflation, higher yields, definitely higher oil or energy. So I'm still a bear.
What nice segue, by the way, into oil. When all went negative, just after soon it popped up, a certain Egyptian businessman called Mr. Sawiri said oil to 100, and he laid out some reasons. A couple of weeks ago, you sent out a tweet saying oil to 230, and it raised a couple of eyebrows. And I'm wondering if you would like to unpack that for us.
Yes. So it actually was March of 2021. I wrote an article for clients and then made it public facing, oil as an inflation hedge. So had already positioned for that November 2020 energy outperformance into Q1 of 2021. It delivered. And then in March, I was like, wow, it really, really is strong. So inflation is going to move higher with yields, but oil is the inflation hedge. So I said, if it closes above 65 on a monthly, which is again, kind of interwoven technical analysis. And we have the macro backdrop of, scarcity and such. And basically it served as a really good launch point. In March of 2021, I said, if 65, then 130. So obviously a doubling within a year. So then March came, March of 2022, we tagged $130.50 in crude. So West Texas, okay, WTIC. So I'm like, oh, I gotta revise my price targets because that really worked. So then I came and said, all right, as long as we stay above 93 on a close, again, I'm talking about crude, on a monthly, we're going to move higher. I see the prior 2008 for 148 area getting taken out on our way to 160 this summer, which is at June, July, August timeframe, into I said 160. Remember?
Yeah.
Okay, but that doubling of 130 is the tell. So 260 within a year. So by March of 23. Does that make sense?
It makes 100%. It's a very technical, but it makes a lot of sense, and it's
that was
very
before the
scary.
Russian invasion of Ukraine.
No, I mean, that was to me just a narrative already in play, but it's very scary because looking at things in a macro space, everything is connected with oil. People view oil just as, oh, it's for fuel. No, it's not just for fuel. It's polymers. It's like all your packaging material, your plastics, fertilizer, everything
travel.
We need oil as much as we want to talk climate and stuff like that. We need oil. And you're talking about a redoubling and into inflation, right? I see Powell meeting President Biden today. Yeah, so when this podcast comes out, we'll probably know, but we can only speculate. What do you think Powell is going to say to Biden today?
It doesn't matter.
It doesn't matter.
It doesn't matter. Inflation's moving higher. You saw the prints today from Germany, France, Spain. It doesn't matter. Every time they say peak inflation, I'm like with a big LOL. It's not done. Exactly. Yeah. So, but I have been an inflationista since summer of 2020. Nothing has changed. The macro is not any better. The political isn't any better. The forced, ESG, driven mantra is only making it worse. Yeah. The war is inflationary. Supply chain chaos is inflationary. Food scarcity and insecurity is inflationary. Energy is the inflation hedge. It's it. So the nat gas higher, gasoline, diesel. Last year I had said it was going to double. It's going to double again. So $10, a gallon for diesel puts an enormous strain on the economy. Hence, risk assets are just not where it's at. Defense, cash. I just still feel very worried about where things could go in the form of a flash crash. Okay. So I had warned about this. And I still think there's nothing that has changed. Nothing that has changed. We've gotten a gamma squeeze for 2.5 days after a gamma squeeze in March, on March 15th, right into the end of the month, 2 weeks. What's going to save us now? What is a bullish mantra, whether it be fundamental or macro or technical? It's busted.
So that was my point, right? That's what I wanted to ask you, because Biden, it was last week or the week before, he came out and said they might look at capping the price of fuel. And I thought by myself, there's some Keynesian economics if I ever saw it. I mean, if you think, but I mean, that was just my sort of, it's like, if you think you can cap the price of fuel to fight the rise in inflation, that's pseudoscience, sir. I don't know who's advising you, but you need to get yourself new advisors.
Pseudoscience and suicide. So
suicide.
And emerging markets really don't pay any attention to that. They're like, we need dollars for petrol.
Exactly.
Period. Otherwise, we're going to default. So Biden's pitch to cap prices and energy hasn't worked. SPR release only makes it more bullish as far as I'm concerned. So there's nothing right now that the Fed can do in controlling spiraling energy costs except hiking aggressively. And they haven't even started yet. So I don't see really any pause to the theme that intervention will slow down this freight train of higher energy costs.
Yes. Okay. So moving on, this year and especially last year, and into this year, I've seen a rise of retail traders. And this year, a lot of profits were giving back because people did not know what even what hedging is or what shorting is. Hey,
Yes.
market just goes up. I buy anything, I throw money at anything, it goes up. What would be your, let's say, like 2 top tips for traders, for retail traders specifically going into this environment? And I mean, okay, it gives a backdrop of them never having seen anything like it.
Yes. So I have a few, and they're really, I think, short and to the point. You buy on the way up and you short on the way down. So they're coming in COVID, right? March 2020 type of time frame.
Yes.
And then it started to go south. They didn't realize there was distribution under the surface, and now we've gone down. They're still trying to buy. They're still trying to buy.
They are still trying to buy.
Off.
Yeah.
It's just knock that shit off. So this is basically the first thing. You buy on the way up and you short and you sell on the way down. Okay. Second, I have some technical, mumbo jumbo and some indicators that anyone could put on their chart and kind of follow along. But the point is, that's number one.
Yeah.
Number two is don't risk any more than you're willing to lose. And right now they have shown statistically that retail has lost a lot by doing these lottos constantly. So zoom out, add more time, add more perspective, to learning that this is not the same market that you had in 2020 and 21, because the Fed is removing liquidity. So the increased chance of not only a flash crash, but also just continued wankiness is just heightened. And I think it's very dangerous for retail because they don't really know how to manage risk. So it's easy to buy.
Yes.
It's easy to push that buy button, but it's not easy to manage risk. So don't risk any more than you're willing to lose, is definitely, and go to cash. Don't trade this slop.
Yes.
There's no harm in waiting for this to just fall, settle, then go in. It's not done falling yet. We haven't even had a capitulatory low. They're still buying AMC and Tesla and Bitcoin. So no, it's not done.
The VIX hasn't even spiked it, just to get a bit technical, but the VIX hasn't even spiked yet. I mean, this is just like normal selling.
Well, the VIX may not spike as I was actually expecting. In June, we'd have another low. So I'm still basing that we could have a very sudden, sharp drop, and then VIX will finally get out of its own way. Okay. But that's not the most important tell anymore, because it's been kind of abandoned as a tell. So bonds are a better tell. The dollar higher and bonds lower, much better tell.
Okay.
Oil higher, the euro lower, much better tell. VIX is not so much of a helpful, tool as you will for a tell. And I think there needs to be moving away from that as an instrument, honestly.
That's very good advice. Couple of questions from Twitter, if you don't mind. Twitter always wants to know, what are your thoughts on gold and silver? Even though gold has been the worst performing asset class for the last year, people want to know, what is Samantha's thoughts on gold and silver? So
gold for me is sometimes currency, sometimes commodity, sometimes inflation, sometimes Armageddon trade. Like it morphs. It has a chameleon-like atmosphere to it. So right now I have very specific levels it needs to get and stay above, because I absolutely see gold going higher, especially once we kind of like base in June and then moving into the second half of the year. And it is not safe. So as a hedge, right? Yeah. But there's going to be a point in time where gold lifts off with silver, and it's verifiable. It's like, oh no, we're in trouble trade. So that particular asset class is not worth playing with or paying attention to unless really we start to get in serious trouble. So to me, it's all of my stuff in reviewing gold. Forget its pair with the dollar, for example. It's its own little like asset class that will trigger once we get severe risk off in the market. Until then, it's just a waste of time.
But also, if it starts to move right and it moves with purpose, it becomes like
self-fulfilling.
It hits you in the face. It's like, you can't miss it. It's not these little movements. It's like, oh, it goes.
Yes.
Okay.
It's all or nothing with gold.
Yeah. Last question before I let you leave. Someone wanted to know, is the copper trade over? So
yes, this is very frustrating. Copper, this is very challenged. First and foremost, it has lots of different factors pulling on it. So the China deval of the yuan back on April 20th, 21st, 22nd, that week, put a complete kibosh to the value cyclical rotation.
Yes.
Short term, mind you, but it absolutely put that under pressure. So copper came back with steel, with lumber, with everything, right? So now the whole liftoff theme is we need the USD CNH, right? It's going to keep going higher. That's going to put pressure on commodities and valuation, not oil and not soft commodities like food, wheat, and the like, but everything else, copper. And it's also, but when it tops out and comes back down, then that should be absolutely back in place, because hard assets, my whole theme, right, of things over paper is still very, very viable. But this relationship to ESG has messed it up, right? So we can't have electrification without copper, but copper is obviously in distribution with sharp sell-offs because China closed in COVID lockdowns and because they devalued the yuan. So it's very much a pair trade, that kind of that valve of reflation. And reflation trades don't just go up like oil right now. They have a nature, a cyclical wave about them. And they are absolutely influenced by China because China is the largest buyer of copper, period. So I would say copper is underperforming oil for sure.
Yes.
But I think it'll come back up and it will have its day, but it's just not time. Kind of like precious metals and industrial metals. They're suffering right now for those dynamics I just explained. But oil as a hard commodity, right? Necessary for everything. It's basically taking that all that money is just a huge magnet. And energy is alpha, and copper is underperforming.
Alpha. I'm going to leave you on that note. Samantha, if the listeners want to connect with you and find out more about your trading room, where can they do that?
LaducTrading.com, LADUC trading.com. I'm also on Twitter, Samantha Laduc. I basically have three major products. It's Discord for the newer traders, a little bit more community focused and momentum. And then my fishing club is very much intermediate. And then I have an institutional product, Edge, run by a hedge fund manager. And all three of those products you can find on my website, and you can find me on Twitter.
Nice. So we'll put the links in the comments. Thank you so much for joining us. To our listeners, peace, love, and prosperity. And we'll catch you in the next one. Cheers.